Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Flat Glass Group Co. Limited annual report. Flat Glass Group Co. Limited offers a diverse range of businesses and services across various sectors. The company operates through multiple segments, including PV glass, household glass, architectural glass, float glass, mining products, electricity generation revenue, and other business. In the glass industry, Flat Glass Group provides products such as PV glass, household glass, architectural glass, and float glass to manufacturers, wholesalers, and construction companies. The company also offers supply chain management services and operates ports for efficient logistics. Beyond glass production, Flat Glass Group engages in mining operations, extracting quartzite ores for sale. Additionally, the company invests in and operates energy power plants, generating electricity revenue. It also sells and installs natural gas pipelines to support its energy business. Furthermore, Flat Glass Group provides a range of services, including cargo handling and transportation, equipment manufacturing, and non-metallic mineral product sales. The company is involved in research and development for new materials and technologies, as well as the construction of solar photovoltaic power stations. In terms of technology, Flat Glass Group develops and sells energy technologies and equipment, offering energy management services to its clients. The company's diverse portfolio of businesses and services makes it a significant player in various industries, including glass production, mining, energy generation, and technology development. Flat Glass Group Co. Limited, market capitalization of $37 billion, is significantly larger than the average industry peer of roughly $1 billion. This shows that Flat Glass Group Co. Limited holds a significant advantage in their industry. Flat Glass Group Co. Limited trades at an unknown price-to-earnings ratio of 20 times and a higher price-to-book ratio of 0.88 times relative within the industry. This suggests a potential market detachment, as Flat Glass Group Co. Limited trades at discounted levels while the broader industry remains fairly valued, warranting deeper fundamental analysis. The company maintains a moderate leverage profile, with liabilities making up 49% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 2.94%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The net income of the company experienced a decline over the period under review. Initially, it decreased by 2.58% from RMB 1000 and 6.6 million to RMB 900 and 80.6 million. However, this trend was not consistent as it later increased by RMB 1 billion, 16 million, 129,709.03. Nevertheless, there were instances of decline in net income, including a decrease of 9.08% to RMB 12,000, 632.1 million. The profit margins also underwent changes during the period. The gross profit margin showed an increase of 1.41 percentage points to 16.91%. On the other hand, the operating and net profit margins experienced declines. The operating profit margin decreased from 6.83% to 7.04%, while the net profit margin dropped from 6.73% to 6.93%. The reasons for these changes in net income and profit margins were multifaceted. A significant factor was the decline in glass prices, particularly PV glass. Additionally, there was an imbalance of supply and demand in the industry, which led to optimization of capacity structure. Other contributing factors included inventory impairment losses, losses on disposal of non-current assets, share-based payment expenses, and other non-operating expenses. The company is indeed generating positive operating cash flow, as evident from the financial statements provided on page 69 and page 193 of the report. According to these pages, the net cash flow from operating activities for the current year is a significant RMB 2,911,113,956.32, indicating a substantial inflow of funds into the company's operations. This positive operating cash flow is a crucial indicator of the company's financial health and stability. It suggests that the company is able to generate sufficient cash from its core business activities to meet its operational needs, without relying on external financing or debt. This is a key metric for investors and analysts to assess the company's ability to sustain its growth and profitability over time. In comparison to the previous year, the current year's operating cash flow has decreased by RMB 3,2,086,598.57, which may indicate some challenges in maintaining the same level of operational efficiency. However, the overall positive trend is a reassuring sign for stakeholders, indicating that the company remains financially robust and capable of generating sufficient cash to support its business activities. The company's debt level has undergone significant changes in recent years. While total short-term borrowings decreased by RMB 184,405,630.17, long-term borrowings increased by a substantial amount of RMB 1,449,517,691.15. Furthermore, bonds payable saw a notable increase of RMB 2,149,142,390.48 from the previous year. As a result, total debt has risen by RMB 1,504,357,245.34. In contrast to the rising debt levels, interest expenses have actually decreased. According to the financial reports, interest expenses dropped by RMB 55,125,407.42, 9.7% decrease, and RMB 28,129,106.66, 8.73% decrease. Additionally, financial expenses declined by RMB 71,494,883.49 from RMB 562,439,733.33 to RMB 490,944,849.84. These decreases in interest expenses suggest that the company has managed its debt effectively and is paying less on interest payments. Management's outlook for the company is cautiously optimistic, citing a stable market environment and expected growth in demand for glass products. They are focused on increasing operational efficiency and reducing costs to drive profitability. The business model aims to collect contractual cash flows and sell financial assets. In terms of specific risks, management notes that a decrease in demand for solar energy could lead to significant decreases in demand and prices of PV glass. However, they believe that the company's diversified product portfolio will help mitigate this risk. Management is also committed to sustainability and environmental protection, investing in eco-friendly technologies. This commitment is reflected in their business model, which aims to collect contractual cash flows and sell financial assets. Overall, management's strategy is centered around driving profitability through operational efficiency and cost reduction, while also prioritizing sustainability and environmental protection. The company has a history of distributing its profits to shareholders through dividend payments. According to the provided information, dividends have indeed been paid by the company. The exact amount paid out is RMB 335,796,278.34, as stated in Note III on page 69. This indicates that the company has prioritized returning value to its investors through this means. Concerns about inventory buildup and supply chain disruption are evident in the industry's performance. The data suggests that there is a significant increase in raw materials and finished goods inventory, indicating potential stockpiling issues. For instance, the raw materials closing balance increased by 12% from the opening balance on page 141, while the finished goods closing balance rose by 9% on the same page. Furthermore, some companies are experiencing decreases in inventory levels, which could be a sign of supply chain disruptions. Anhui Flat Glass saw an 8% decrease in raw materials purchases, and Jia Zinggas experienced a 34% drop in raw material purchases. These fluctuations indicate potential issues with the supply chain's ability to meet demand. Additionally, trade barriers and globalization of operations pose risks to the industry, as mentioned on page 15. The mining products inventory decreased by RMB 218,715,550 from 2024 to 2025, highlighting a possible disruption in the supply chain. The net cash flow from operating activities also decreased by RMB 3,2,086,598.57 from last year, which could be a sign of financial strain due to supply chain issues. Overall, these findings suggest that there are legitimate concerns about inventory buildup and supply chain disruption in the industry. That concludes the financial summary for Flat Glass Group Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.